Manglam. For that, Sacchitanand Uttekar joins in to discuss what he's targeting and what his strategy is today. Sacchitanand, thanks very much for taking the time out. Well, it is definitely a down day, but let's start the conversation with the positives, which is the entire pharmaceutical space, which is buzzing around. What is your call?
Good afternoon, Ekta. Good afternoon, madam. Clearly, I think there has been a very strong price action when it comes to Nifty Pharma. The expectation was that there are signs of consolidation, but looking at the news flow, the anticipation was that there could be a breakdown. But if you look at the price action closely, even yesterday when we saw the Nifty, breaking or surpassing that 11 days of consolidation, we saw a very strong recovery from Nifty Pharma itself. I think the base at around 21,000 was well maintained. And if you look at the daily chart, it exhibited a bullish hammer formation, which is again a very strong sign of a reversal. So I think going forward, we may see, Nifty Pharma itself, scaling towards 23,000 levels. The base which it maintained in yesterday's trading session at around 20,500, I think that particular base may not be violated in this particular series itself. And we may see this particular rally getting extended towards 23,000.
Okay, what about other stocks and strategy today?
Well, the focus is on stock-specific action. If you look at the Nifty, we are firm with a view that Nifty could scale towards 25,180 during this particular expiry itself, and that's why we are continuing building long positions here. Even right now, the pullback is very meaningful. One can keep a stop loss at 24,580 on a closing basis and try to add more long positions. We are expecting that this particular decline may extend towards 24,640, 660, which will be an ideal level to add more long positions when it comes to index. On the stocks front, there are a lot of stocks which are showing consolidation breakouts, base building breakouts. So one of them is LIC Housing Finance. Now, if you look at the overall structure, for the last 5 months, the stock was consolidating. It was forming a rounding bottom kind of a formation. The neckline of this particular pattern was placed somewhere close to around 600 levels. But if you look at yesterday's price action, we saw its 200-day exponential moving average plus its 50 weekly exponential moving average, which is placed at around 595. This particular level was breached with a gap. Since then, there has been long additions which are seen in this particular counter, and that's why we believe that there could be further momentum in this counter. Keeping a stop loss at around 607, one can accumulate this particular stock for a pattern target of around 660. The trading target is placed around 642. The second counter which has come up on our radar is Concor. Now, even here, after almost 6 weeks of consolidation, we are seeing a very strong OI breakout at around 700 levels. So probably we may see further elevation in levels. The momentum can extend towards 746 on an immediate basis, but the positional target is placed somewhere close to around 780. So it's a consolidation breakout, and that's why we believe that the moment the stocks dips below 684, this particular pattern will be void. So keeping a stop loss at 684, long positions are recommended in Concor. Post target would be around 746, positional target would be around 780, and a disclosure would be that we have recommended this stock trade setup to our clients as well.
Important milestone achieved for Concor as well, because the Western Dedicated Freight Corridor has been completed. We have seen some notifications coming in from the government, so that's the fundamental part. Sachi, thank you so much for joining in and giving us individual stocks and index trades. Take a short break on the other